Well, ladies and gentlemen, this is Alla Peters, founder of Fibonacci Trading Institute. It's my joy and pleasure being here with you. In this webinar, I will share how you can benefit from accuracy of Fibonacci strategies on any instrument, any time frame, and any platform. And I will show you various examples from futures to Forex to stocks, how you can benefit from using Fibonacci and price action for your entries, for your stops, and for your targets. But first, let's remember, never, ever, ever, ever trade with risk you cannot afford. Understand that trading is a serious business, and everything I do and share in this webinar, I share for educational purposes. Until 2008, I believed in fundamentals, and I briefly looked at indicators. In 2008, when markets started crashing, I started questioning everything about markets. I started understanding very, very clearly that there is much more to the markets than fundamentals, earnings, or indicators can ever tell us. This is a stock that I was holding at that time, one of the top energy companies in US, Chesapeake Energy. This is a stock that had stunning fundamentals, solid earnings, solid spreadsheets. This stock continued crashing while CNBC and everybody was telling the world to hold this stock because company was so solid. Company continued crashing. In 2008, I recognized very, very clearly that Fibonacci is the only natural predictive tool in the market that can identify market trend inception, trend reversals in advance. Every single level you're witnessing in front of you, I developed in 2008 and been teaching to traders from beginner to hedge fund trader in US and globally. When price comes to reversal zone, no matter if it's S&P, no matter if it's Apple, no matter if it's Chesapeake Energy, it will collapse 80+% of the time. Here are examples, which I will continue bringing up throughout the webinar. Do you remember Euro at reversal zone? Do you remember Euro at 3,900? This is a screenshot from 2014. 2014, I said 3,400, 3,367 area on Euro will be key Fibonacci support. There is extremely good reason why this level is so bright pink. This is the most important Fibonacci level that's always present in the markets unless key rule you learn in the course, which I will go over next, is present. As you can see in 2013, this was key Fibonacci resistance, became key Fibonacci support. This is weekly chart. When this support was broken, Euro went into free fall until monthly support was reached. This is a screenshot from 2015. As you can see in this screenshot, this level was never, ever, ever broken. This is where Euro rallied from. This is exact same formula that applies to Chesapeake Energy, that applies to any instrument you will choose to trade. Here is Apple. Here's Apple screenshot from April 2016. When I said this is key Fibonacci support, does everybody remember Apple at these levels? Let's make it a little bit closer. Is everyone seeing how crucial this support is? Do you remember when Apple touched this support, Apple came out with the worst earnings in 13 years? Did it matter? If earnings and indicators worked, everyone would be Bill Gates. Horrific earnings and Apple rallied as expected because Fibonacci support was respected. As we know, Apple continued rallying. And that's what happened time and time again. No matter what instrument you trade, no matter what time frame. Market is flawless Fibonacci puzzle, and I recognized that very, very clearly in 2008. And that's what you will continue witnessing throughout webinar. Every single one of these levels applies and can be installed on any platform. Every single one of these levels can be traded on any instrument. Every single one of these levels can be used as your key target and your key point of entry if it acts as key support and key resistance. Here's a reminder on Amazon. Amazon had stunning earnings when it came to reversal zone. Do you remember Amazon in 2016? Did you wonder why Amazon continued collapsing from 700, as I said, all the way to 500? Do you remember what happened on Amazon at 500? Amazon collapsed more than 20%. This is where Amazon is now. Buyers stepped in from 500 as expected. Market is flawless Fibonacci puzzle. Fibonacci is the only natural predictive tool in the markets. Absolutely no software, no indicators used of any kind. Every single entry based on key rules, every single target based on key rules, every single stop based on key rules, which I will go over what I teach class 1 in the course shortly. This exact same strategy applicable to anything you will choose to trade. So let's go briefly over what Fibonacci is. Fibonacci is a special mathematical sequence that was discovered by Leonardo Pisano in 13th century. This is a sequence that creating repetitive spirals, triangles, and patterns in nature and exact same patterns present in financial markets. This is the patterns you can use to your advantage. On 1 minute chart, or daily or weekly or monthly, it all depends on your risk management and what kind of trader are you? What instrument do you want to use? As market flawless Fibonacci puzzle. And that's what I demonstrate in the trading room on daily basis. Here's the examples from the trading room and what played out recently. Here is the day trading chart, 60-minute chart. This is a chart that can be converted to 1-minute chart. This is a chart that can be converted to any chart you will choose to trade. As you can see, exact same levels you saw on Chesapeake Energy, where price collapsed from, reversal zone. And as you could see, when price collapsed until this reversal zone, this is where buyers stepped in from. Absolutely no surprise whatsoever. Formula remains the same. If I will remove the name from the chart, you will see that one thing is for certain. Price structure identical on S&P, on Euro, on Chesapeake Energy, on Apple, on any instrument you will choose to trade. Exact same identical structure is what played out on long-term positions on S&P. Let's look down memory lane and see the accuracy of the method. Here's a chart from 2016. This is monthly chart. Do you remember S&P at 1800? Do you see 2800 in front of you on this chart? Has S&P reached this level? Absolutely. Bearish correction finished, Fibonacci support respected. S&P skyrocketed to these levels. Day trading is not your cup of tea. You can use everything to your advantage on your long-term positions. This is what S&P had done when it came from trend inception on weekly until key Fibonacci resistance. Do you remember that level in summer of 2016? 2200 is broken and S&P skyrocketed. This is what I'm teaching in the class tomorrow morning, and we will go over the basic rules shortly, because price action is identical to your day trading chart or to long-term positions, which you can take advantage of via options, of course, as well. So, Einstein mentioning Fibonacci in his theory of relativity. This mathematical theory starts with number 0 and continue evolving to 1. If you keep adding each subsequent number, this is what keeps repeating. My apology. This is what creating spiral in the markets. If you add 0 to 1, will create 1. 1 to 2 will create 3. 3 to 5, 8. These are the key Fibonacci numbers that create golden ratio and patterns that continue repeating in the markets, which is exact same thing you see at the seashell, which is exact same thing you see in the waves of the ocean, in symmetry in human body. This is what market is formed by. Market not a chaos, market is Fibonacci puzzle. This repetitive price action waves can be capitalized upon in any market. So what is the difference between Fibonacci and indicators? This is very important point. Please listen. Fibonacci naturally predictive. Indicators are delayed. No indicator on the planet will tell you minutes on your day trading chart, hours on your day trading trend chart, or on your position chart, days, weeks, and months in advance, where key Fibonacci targets will be. Fibonacci is natural, predictive, indicators artificial. Fibonacci mathematical sequence that can be used on any platform, any instrument, any time frame. Indicators can be used only on certain platform, certain time frame, and fees will vary. This is key difference, and this is absolutely essential to recognize. Here's a reminder about oil. This is a chart that's been present in the trading room since 2011. This is Fibonacci reversal zone. Do you remember oil at 126 area? Do you remember how it was collapsing and going into free fall? Absolutely no surprise where oil had taken a massive pause, the exact same level as you saw on Apple. Decision point 1 key level 86 was respected on oil for years. This is the end of the minor trend. That euro respected, oil didn't. When oil went into free fall, do you remember the word reversal zone? Are you surprised that oil rallied from here? No surprise whatsoever. This is expected. This is where bullish rally on oil had started. Absolutely no surprise whatsoever, none. As we know extremely well, bullish rally continued further up, but this is where buyers came from. Exact same thing, except reversal, not collapse. Here it is resistance, here it is support. Rules are met. Take a trade. All the same formula. This morning we were in oil during the news. We converted the chart to 1 minute at the time of oil news release to see that Fibonacci drastically more accurate than any news event will ever be. But respected news events due to volatility is the key. Here's an example of reversal zone on oil in the month of April. This is what was in a play on oil. where oil collapsed from despite bullish news announcement, hundreds and hundreds of points. Very, very important to separate reversal from correction, which is what oil had done prior in December 2016, and eventually collapsing completely. Indicators formed by mathematically applying formula to number of prior periods. Indicators will not tell you how market will behave in the future. Fibonacci will. Indicators blocking your knowledge of the markets, not expanding your knowledge of price action, when in fact the only thing you need is pure price with unblocked vision. Fibonacci highly accurate predictive mathematical sequence which is essential in day trading targets and long-term investment exits. Only Fibonacci can identify exits in advance of current price. Fibonacci retracement levels are the key to the method. Fibonacci retracements, when used with strict set of rules, will show trader high accuracy trade targets using the same set of rules on any instrument, any platform, any time frames. Fibonacci retracements cannot be traded without strict set of rules. Fibonacci retracements can only be used properly when rules are met. So, trade with clarity, no unnecessary variables, efficient decision-making, uninhibited view of the market. As you can see, the only thing that's present is Fibonacci. So here's my favorite part. This is what I'm teaching in the class tomorrow morning at 11 a.m. EST. This is what market does every day. This market structure. Major trend in the market formed by 5 Fibonacci waves. Key point of entry at the trend inception, wave 1. Rules are met, take a trade. As you saw, this was the example on oil. Agree? Trend inception. Rules are met, take a trade. As you agree, bullish news does not mean a thing if reversal zone is met. Trend inception to the downside. Bullish news to be ignored. Fibonacci to be respected. If you miss the point of entry at trend inception wave 1, it is absolutely essential and crucial to respect and understand this and stay out of wave 2. Wave 2 is a counter trend wave. Wave 2 has drastically lower probability for your point of entry. Absolutely essential to understand that. Second point of entry that's available to trader is inception of wave 3. Wave 3 is finished. Do not enter here. This is where trader gets in trouble. This is where your probability drops significantly, no matter how powerful the trend is. Here's an example. Look on this chart. This is a chart that shows you every single time we had bearish news, market rallied. Every single event was extremely bearish, and every single time market rallied because Fibonacci reversal zone was present. However, this resistance was never broken for over a month. This is the key. If you are trading 1, 2, 3, 5, 15-minute chart, this is where you're monitoring for bullish news, for bullish point of entry, no matter how bearish the news is. Every single time bearish news, oil rallied. Fibonacci overrode news time and time again. Trend inception is ultimate point of entry. Here's another fascinating example. Love seeing that in the markets. We love witnessing Fibonacci trend inception and Fibonacci trend reversals when we have completely contradictory news. This was an example on July 11th. Market collapsed to trend inception. Look at this bullish rally. Shorting market because email scandal came out did not mean a thing. Market rallied as expected. Trend inception, ultimate point of entry. Buying this late is the most dangerous place to be, which is exactly where bullish rally is now on S&P, which is what we're dissecting to the tick in tomorrow's Fibonacci class, where we're dissecting charts from day trading to long-term charts going back all the way to 2008. As 2800 had been forecasted on the website, in YouTube channel and trading room, long before it was reached. So this is crucial market structure. This is what keeps repeating no matter what instrument you trade. If you know this formula and you apply it to any instrument from 1 minute on S&P, on oil, Dow, NASDAQ, VIX, to Apple monthly, to Forex weekly, to ETFs, to Bitcoin, this formula does not change. The only thing that changes, risk management and trader psychology. That remains constant. What size account you trade and what instrument appeals to you is your choice. So here's the market structure on NASDAQ. Here's exact same 5 waves. This is where trend reversed, as expected, at key Fibonacci reversal zone. Do you ever wonder why trend reverses so sharply and news is so bullish? Should not be surprised, because Fibonacci reversal zone is reached. This is exact same examples on Euro hourly. Powerful bullish trend reached Fibonacci levels, and this is a section where absolutely essential and crucial to stay out of the markets and not to participate in the markets. If you understand these levels, if you understand how essential this area is, you do not babysit the structure, which is what played out most of the day this morning on S&P until oil news release. This is one of the most crucial aspects of your trading, knowing where this area is. Rules are met at trend inception, ultimate point of entry. Placing trade randomly without rules, never an option. No matter if it's 1 minute, no matter if it's 5 hours, no matter if it's daily, weekly, monthly, stop placement is essential. Risk management and psychology, never to be ignored. These are crucial components to every single trade, placement, and investment decisions. Oil extremely choppy, nevertheless respecting Fibonacci levels, as you're witnessing on multiple other examples. Here we go. This was the event on oil on March 1st. Fibonacci resistance is present. Very bullish news, and oil went into free fall. Once again, Fibonacci more accurate than news will ever be. If news worked, instead of this formula, everyone would be incredibly successful. Trading on the news, trading on fundamentals, trading on earnings will not work. This is one of the cleanest structures ever, Google chart. Very simple, very basic 5-wave pattern. Fibonacci resistance is reached, Google reversed, despite very bullish earnings. And this is a formula that keeps evolving in the markets time and time again. Any instrument, any time frame, any platform. I work with traders from beginner to hedge fund traders since 2011. Traders who are day traders, traders who are position traders, option traders, who are using FTI proprietary method from small account to institutional level accounts. My favorite part of the website, where you can listen to graduates of the course who trading various instruments in various time frames, all posted under testimonials. As you can see, students speak and share what they trade. Met Michael a couple of times, trading SPY options. Ed trading also options. I met with Sam in Asia, trading options as well. Gernot is a futures trader. Joseph, who is still in the course, hedge fund manager. Every single trader trades different instrument. Every single trader applies different psychology, different risk management that's appropriate for him and his account size and his personal circumstance. Fibonacci course in group sessions is ongoing. Fibonacci course in group sessions 8 weeks, private mentoring 16. Group sessions included in private mentoring. Modules only supplemental. All classes are live. I am with students 4 or 5 days a week, including pre-market and key classes. On Monday and Friday, I will be teaching tomorrow. In one class, you see very, very clearly that Fibonacci will give you very high accuracy targets, no matter if you are a day trader, no matter if you are a position trader. If you are interested in taking the course, I highly encourage you, please review the information on the website and do not hesitate to contact me. Telephone number posted on the website as well as email address 925-257-4298 and info@fibinstitute.com. I also encourage you to browse YouTube channel for multiple examples as well as blog going back years. So, ladies and gentlemen, any questions I can ask for you right now, please let me know. I posted links throughout. And if you have any questions, please do ask, as I will continue highlighting examples throughout the next 2 minutes, as we have few more minutes left. So if you would like to join us in the course, you will learn proprietary Fibonacci strategies with entries, stops, and targets. You will learn to identify support and resistance along with targets, which you can use on day trading and investment positions. This proprietary Fibonacci tool can be installed on most platforms. Focus of the method on trend inception and trend reversal levels. So here are a few more examples. Here's S&P chart from the room from February over a year ago. As you can see, trend inception, bullish point of entry. As you can see, shorts from key Fibonacci resistance. Here is another example. Remember the chart we highlighted prior, that this was key Fibonacci resistance on S&P? And do you see that all of these levels had been projected far in advance? Do you remember S&P at 2300? Do you remember 1800 level prior? Are you surprised that these levels had been in the room for years? In the trading room, you don't have to wait for days, weeks, and months. But this is a chart that's been present in the room for years that you can benefit from forever as position trader or investor. identically using day trading chart. It's all the same. When rules are met, you apply the levels. Again, James, all based on the rules. Weekly chart can remain for years and years. All the rules, all the details in the course. Day trading levels, hourly levels, for example, for this week had been present in the room since early Tuesday. Been in a place this morning in the room. Rules are met, change levels. Key rules in the class tomorrow morning. I don't have enough time in the webinar to teach the course, as I hope you understand. So, more and more examples as I look forward answering your questions. Has anybody heard of scandal about Valiant? Valiant that rocked the world of hedge funds? As I posted on multiple sources and presented at hedge fund convention, it was not a good idea to buy Valiant into reversal zone. As you saw on Apple, on Chesapeake Energy, as you saw on Euro, top hedge funds in US were buying Valiant into reversal zone. Valiant collapsed 86% since announcement. Time and time again. Any other questions, please do ask. Here's another example. Here's FIT. I worked with hedge fund traders, very young group of hedge fund managers in their early 30s. They were determined to hold FIT prior to earnings because FIT is such a cool gadget. FIT came out with excellent earnings. So why in the world did it collapse from 19? It actually collapsed drastically lower. Because Fibonacci reversal zone was reached. That's why. Buying into reversal zone, no matter how stunning the earnings are, will give you success rate of less than 20%. You want to buy into reversal zone? That's what you will get. Fibonacci will override any news, any earnings, any events. Reversal zone is present. Expect reversal 80+% of the time, no matter how bullish the news is. Here's Netflix. Netflix had stunning earnings, but was at reversal zone. Why in the world did it collapse? Because Fibonacci reversal zone is present. It's all the same formula. That's exactly the reason I named this level reversal zone. More examples. Here we go. Oil bullish news. On that famous day of September 8th, 2016, we had the most bullish news since 1999. My goodness. Do you want to buy on that very bullish news? That 17 years so powerful? Absolutely not. Fibonacci reversal zone is present. Oil collapsed from 48 to 43. But Fibonacci reversal zone bullish trend inception is reached. Oil rallied. That's what price does. Market is flawless Fibonacci puzzle. That's what I teach in the course every day. All you have to do, learn the rules and apply the rules to the instrument of your choice. Choice is yours. What you want to trade. Here's Bank of America, 18 level in 2015. You decide, Bill, what time frame you want to use. In the course, I have students who are trading 1-minute chart, 5-minute chart. In the course, I have students who are trading daily, hourly, monthly charts. You do self-assessment and you look at your account and you ask yourself a question. What is your risk management? How big of a stop can you take? How long can you be in a trade? Can you sleep when you have a trade on? Or can you be a day trader? Self-awareness and emotional intelligence are crucial to successful trading. Absolutely essential. Only you can identify that. As you saw on multiple examples, every single chart, different instrument, different time frame. Do self-assessment and ask yourself a question. How comfortable are you to be a day trader? Are you capable of being a sniper? How is your technical skills? Absolutely essential to identify that. Trading charts that are larger than 5 minutes as a day trader, wise to do. Trading charts at anything less than 5 minutes, you will have very painful trading. You will be glued to the screen, and chances of you making not very wise decisions is very, very high. So in the course, I constantly encourage day traders to trade charts 5 minutes and higher, not lower. Because chances of you being rational, chances of you being calm is drastically higher versus being in very fast markets. Here's an example of FOMC on famous April 28, 2015. Do you remember reversal zone on oil? Trend inception? Rules are met, take a trade. This exact same identical chart you can convert to 1, 2, 3, 5-minute chart, 15. Any chart you want to trade, choice is yours. Here's another example of exact same formula, except this is not day trading chart. Do you remember correction 2015, 2014? Do you remember 1800 level I had shown you prior as key support? Present in the room for years. Look at this. Identical formula, except this is your investment decisions. 1800 key support was respected. If you come to my website, in my humble opinion, under about, you can see NinjaTrader is our recommended platform, but again, students on multiple platforms. NinjaTrader give you very good charts, very good data with kinetic that you can use on any instruments you will choose to trade. When I work with you in private mentoring and you install NinjaTrader 7, I set up charts and Fibonacci tool for you. You can execute your trades with Interactive Broker. You can execute your trades on platforms I've never heard on. You want to trade on TradeStation? Why not? You want to trade on MT4? Sure. Tomorrow morning, I'm working with trader in Uganda who trades Forex. Yesterday afternoon, I worked with hedge fund manager in New York who is using options on stocks. This morning, I worked with day trader who trading S&P and oil, and hedge fund manager in Alabama. What you trading is your choice. I travel all over the world meeting students. Students, my dearest friends for life. Choice is yours, what you choose to trade. Here's one of my favorite people, Carol. She's an oil trader. Incredible lady who is a grandmother in Dallas. Here's Michael. with whom I met multiple times, who is a day trader and also options trader. What you want to trade is up to you. Here's another Michael with whom I met in California. I'm in the middle, who trades options on stocks, futures, and SPY index. William and Amy, who are also day traders and option traders. You decide what is your psychological comfort and what is your risk management. Is your account 1,000? Is your account 7 or 8 figures? How much can you risk to trade? So, key class tomorrow morning where we dissect day trading charts and moving all the way to monthly and yearly charts that you can see how you can benefit from accuracy of Fibonacci proprietary tool, proprietary strategies, not just in day trading, but your long-term investment decisions. Group course for weeks I extended to 8 in case you have to take time off, in case you get sick. Private mentoring 16, again, you need to take time off. It's never a problem. Group course included in private mentoring. In private mentoring, I meet with you once a week in addition to all group classes. If you would like to meet twice a week and finish course sooner, not a problem. All classes are live modules only, supplemental. With students, I am 4 or 5 days a week, meeting before trading room open. Trading psychology is the core of the course. Any other questions? So, ladies and gentlemen, Traders Talk Live, everyone, it's my joy and pleasure being here with you. If you would like to get in touch with me, I greatly appreciate if you review all the information on the website first. Thank you, Cynthia, means the world. So please review the information and never hesitate to call or email me. I always look forward to speaking with you. 925-257-4298 or info@fibinstitute.com. And again, please review blog and YouTube channel for examples. Blog has latest newsletters and latest events from the room posted on the website along with videos. So thank you, ladies and gentlemen. I look forward to hearing from you. I hope you enjoyed the webinar. Thank you so much.